Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, to begin with, the Australian dollar still hasn't broken above the 60-day moving average. Over the last 3 days, we've had stabs above it, but not closing above it. At this point, the level is still at 78.80. Until we get a close above it in New York at 7 a.m. Sydney time, then I would say that at this point is the market's continuing to fall. At present, though, we are still maintaining within this range of 78.25 to around 78.80 to 79.40 top side. The high overnight was at 79.15, where the bulls did quietly gather together and took the challenge up there, but miserably failed, and I do expect to see further weakness coming back into the market and still sell on rallies, as I do see the currency dropping. Overnight, hardly any movement really for the euro. It did have a look briefly above the level of 124 to print a high of 12 before dropping back. It is assessed that the market is still slowly digesting the recent announcement by Twitter from President Trump after the sacking of Secretary of State Rex Tillerson, who has been replaced by CIA Director Mike Pompeo. It is now considered that the market today will probably be slightly mixed due to the uncertainty of direction, but I still hold the bearishness of, for the euro and the bullish outlook for the US dollar, as it still comfortably holds above 89.40. The president did tweet as well with the new Secretary of State that Mr. Pompeo will do a fantastic job, and also along the lines of the fact that the markets will look for any kind of weakness in the US dollar. But next week we do have the Fed Reserve rate decision. I do expect 25 basis points. This should inject further strength into the US dollar. Now, this is on Thursday, on the 22nd of March, at 5 a.m. Sydney time. Well, the dollar yen is a little bit concerning now that the fact is that we've got a long-legged doji for one, and the last 2 days have been bearish. The market is now challenging its level around 106. Now, I do expect to see support from 105.5, and as long as we don't go beneath 35, then I do expect to see another rebound. It looks like to me that we're just moving back to re-challenge this once resistance, now support, which you can see is at 103.35. I'm a buyer from this level, as I do expect to see a rebound back to 106.85 where the resistance is. An interesting price action overnight. We've got a doji. And very surprisingly, no follow through from the break of 139.30.40. Market was a little bit on the bid tone last night as the headlines reported that the growing war between words with the UK and Russia after a poisoning of a former Russian spy in London, along with the fact that Brexit transition deal will soon be agreed with the UK and the EU. Nevertheless, from a technical point, I'm not bullish at these levels, and I still struggle to see any kind of rally sustaining, purely for the fact is that MACD is not showing any kind of bullish implications, and the RSI is back to the top side of the range. Therefore, we should see a pullback towards a support that comes in now at 138.90 to 138.45. A break beneath 137.70 will give us a view towards 135. Well, the gold outlook still maintains sideways and hardly unchanged, considering we've had a few stabs to the downside. Overall, I still expect to see a further weaker outcome. And the reason behind that is the closer that we get to the rate hike in the US, is the market may actually weaken. But I do expect to see demand from the base of 1,300. On the day, 19 to 29 is the range. Well, oil still looks very concerning to the downside, and I still view the market will take out this level of $60 a barrel and look towards 58 and reassess from there. Any advancement should find resistance now at 61.5. And wrapping up with silver, like gold, is going sideways. Little to report here, but I do expect to see demand from $16.15 to $20 and eventually take on the top side and rally beyond $16.95. But that's the broader picture. But in the interim, we still could see weakness, but likely to be a buy from that level, as I mentioned, at 16.65. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day that's ahead.